Okay, we're live.
Thank you. Good afternoon, everybody. The Tax Review Commission, yeah, that's who we are, is called to order. And first item of business is any public testimony, comment, anything? Did we receive anything?
We did not.
Okay, thank you. I do want to report to all of you that I had a meeting with Senator Delacruz and his staff last week. And I went over all of the issues that we have been discussing and the general tenor of what it looks like we're going to be recommending. He was particularly interested in the property tax issue. Because he is really interested in ensuring that housing is developed and sees the necessity of working with counties to make sure that that can happen. So I thought that was interesting and positive. He also expressed support for the Simpson-Bowles-like commission, which I thought was very encouraging also. And then the only other thing that might be of interest is that his staff anyway, wanted to make sure that we had been working with the same people that they've been talking to on greenhouse gases and the green fee. And I assured him that we are talking to the same people and they are providing us the same kinds of information that the legislature has already heard. So any of you who have occasion to talk to your legislators, I think that would be really good. I tried to get hold of Chair Luke and Representative, I'm blanking on his name, but I wasn't able to get in touch with those folks, but we'll still try to follow up with legislators when we have our agenda in place. So moving on with the agenda, let's take a look at the minutes. Are there any edits, changes recommended? If not, can I have a motion to approve?
So moved.
Thank you, Murray. Second, Sale. So I'm going to take roll, asking you to approve or disapprove. Alton?
Approve.
Murray?
Yes.
Scott?
Yes.
Sale?
Approve.
Winston?
Yes.
And chair votes yes. Okay, so the next item, thank you, is balancing the tax system. Seth, do you have a presentation for us?
I was not aware. I was supposed to have a presentation on balancing the tax system.
Okay, well, I guess we had a little miscommunication there.
I'm sorry. I'm sorry.
Yeah, I see that that's on the agenda, so I assume that your office had done some work on trying to synthesize all of these recommendations.
Oh, okay. I totally neglected, did not understand that and neglected that responsibility. So I completely apologize. So in the future, for the next one, just so I know, you just want all the recommendations, the revenue estimates for all the recommendations. Is that what you were looking for?
Yes, and and to the extent that they interact with each other,
Okay.
How that would work too.
Okay. Well, this will be great because there's still a couple of things that you guys need to decide in terms of your explicit recommendations. So it'll be helpful to know the explicit recommendations so we could do better revenue estimates up with it. But I really do apologize. I'm sorry about that. I didn't
No, that's okay, because as you say, it will be a lot easier for you to do that if we can be more clear about what it is that we want you to do. Okay, well then let's go on, and we will expect to hear from you on December 1st when we meet again. So let's move on to Jonathan's report. And Jonathan, I just want to express appreciation for all the work you did to pull all of that together. And I know that you were working with a lot of ambiguity. And I just want to say that the things that you had put into your report that we had left pretty vague make it much easier for us to react to and decide what we really want to recommend. So going through the report and recommendations, I thought it might be helpful for each of you who were kind of managing an issue to speak to what's in the report and tell us what you would recommend that we include. So the first item is about the carbon tax. Murray, would you like to discuss that, please?
Yeah, I think, so I went through Jonathan's write-up, and I actually, just so everyone knows, I think because the way the sunshine laws work, I actually marked it up and sent it back to Jonathan, just me speaking as one person, right? I don't think I can share that with the group until we have these types of discussions available to the public, if I understand correctly. But I gave him some initial comments, nothing earth-shattering, I don't think. But on the carbon tax subject in particular, we did decide, if you recall, we all made these kind of high-level decisions to include things. We didn't make some of the detailed number decisions that kind of, I guess, Seth is referring to on finalizing some of this. So where I think Jonathan's draft came out was, I believe it was the 80-20 split. Correct me if I'm wrong, Jonathan. I think you were suggesting the 80-20 split of revenues, which is, I think, where I personally am. I think that makes sense. I think 50-50 is probably, I mean, the government would love it, but it's probably giving them a bit too much and not enough on the cash back side of it. And then the only other major remaining piece of the carbon tax, major piece, now I'm not talking about implementation, I'm talking about the numbers, stuff that would go into the kind of stuff that Seth and Dr. McKenna would need to look at numbers for, was whether or not that cash back was in equal shares to all households, meaning all 5 income quintiles, or just to the bottom 4. Recall that Dr. Kaufman provided 2 sets of numbers for 80-20, and one was quintiles 1 through 4. So I think she said that was up to about someone making $150,000 or $160,000 a year. So only those people get their cash back, and the richest 1/5 of society does not, or everyone gets their equal shares. And she had 2 different sets of numbers for that. Not surprisingly, if you leave out the richest quintile, you've got a bit more money to share with the bottom 4. And so it's even more progressive if you do it that way. The trade-off is that you can no longer say that everyone is the same or better off financially, because if you share across all 5, you look at Dr. Kaufman's charts, you can say that it's still progressive because the people that are the best off is quintile 1, and then quintile 2, then 3, and it gets closer and closer to break even until you get to quintile 5 and you're about break even roughly. So the trade-off is only sharing the money between the bottom 4 quintiles, you could say, has more equity, it's more progressive. But if you share it across all 5 quintiles, nobody's being expressly left out. You don't have to, watch when someone's income bumps them above some level and then you stop sending them a check and that kind of thing. And when people comment on, it's another tax, we don't want any more taxes, you could honestly say, based on her research, that based on the income quintiles, everyone is the same or better off, at least at that level of analysis, understanding that her analysis doesn't cover, for example, details like what if someone owns an energy intensive business, then overall they might be worse off because they have an energy intensive business. Those level of details we're never going to get. But there is this decision about, do you share across all households or just the bottom 4 quintiles? So we never actually decided on that. And to be fair, we never officially, as a tax review commission, decided on the 100% cash back, the 80-20 cash back, or the 50-50 cash back. So we do have those decisions to make. I guess you can probably see where I'm going with it. If I was to make a personal recommendation, I would say 80-20 is the right split, and sharing across all income quintiles, not expressly leaving anyone out, would be both administratively easier to execute, and also you don't have the issue of telling 1/5 of the population that you're not going to get any money back from this, so you're going to be definitely worse off. That's my 2 cents. Happy to have people disagree.
Thanks, Barry. Comment? I think I would come down. I like the 80-20. I would prefer that the recommendation be for just the lower 80%. And part of that is based on the fact that renewable energy tax credits and other kinds of tax credits to encourage energy efficient devices and so forth have been available for a long time and have been mostly, I believe, benefiting people who have more money, because to purchase a PV system or whatever requires a lot of money up front. So I think that higher income households probably have already benefited in similar ways. Any other comment? Would it be appropriate to ask for a vote? Because we do, or are we still waiting for more information, or are we waiting? Yeah, or are we ready to make a decision on this?
The only comment I'd make on that front is Dr. Kaufman presented a preview of the work she's doing for us, not yet the final report. So, I mean, it's always good to make, well, not always good. It's often, and when you're on a short deadline like this, good to make decisions early so you can finalize the report. But at the same time, we don't technically have McKenna's final report for what we paid her to do. So we could either take a straw count right now and see where we are, or just wait till Dr. Kaufman finishes the report.
Okay. Does anybody have any strong feelings one way or another about either of these proposals? Okay, then why don't we wait until next week, or December 1st, our next meeting, and see whether we can resolve this issue at that time. One thing also that I think I saw when I was reading through was any recommendations we might want to make to the state on how they use the 20% that they get. And I don't know whether we wanted to speak to that or whether that's just, up to them.
I'll make one comment. While I would certainly personally have no objections to making recommendations, my view is that the carbon tax will, even if we recommend it strongly, the carbon tax will have a very fierce uphill battle to even have a chance of getting passed. It might be a couple more years before something like this gets passed, just knowing how it takes usually multiple years to try to get stuff like this done. I think given the trend in the legislature to sort of get rid of special funds and try to get as much back in the general fund as possible, that if they see this as money going to the general fund, it'll be more attractive to legislators than if we have all these, special funds that it pays into. So in terms of trying to get it passed, I think our chances are better if it goes to the general fund rather than trying to divvy it up ourselves in some way. But I wouldn't object if someone wanted to have a list of things that we recommend, because they could always just ignore the recommendation if they wanted to.
Right. Yeah, no, that makes a lot of sense. And it is certainly true that our recommendations are not binding on anybody following through with them. Okay, any other questions or comments on the carbon tax section? Okay, then the next section is about the visitor green fee. And the one recommendation I would make on that, and that's actually in the box that says recommendation, I maybe would change that to say commit adequate resources to study and develop a specific design and implementation plan for visitor green fees that provide sufficient dedicated revenues in support of conservation and preservation. Basically, just making it very clear in the recommendation section that we're asking for an implementation study. Are there any?
Well, I just noted that I obviously won't go into all of it, but Seth had a number of recommendations related to the green fee in his write-up, which I thought, in terms of providing more detail, I thought was good. We'll probably have to be a little bit more specific in terms of defining how this will be different from the study that was it TNC or CI? I always get to mix up. TNC, right? Nature Conservancy or Conservation International? I always get them mixed up.
CI.
Was that?
It's CI.
Was it CI? Gosh, I'm terrible. Anyway, just to differentiate between what we're recommending versus what's already done, like you said, Beth, it's an implementation study. So we don't want just the high level kind of, this is how it would work. It's like specifically recommend, is it a fee for going into each of these, parks and protected areas? Is it some sort of is it a TAT adjustment? Is it, we need to have the specific mechanism clearly defined and ready for execution out of this study, with revenue estimates and everything based on how it would be implemented. Not just, yeah, it could work this way, or it could work this way, or it could work this way. We need an implementation study, which is, yeah, there's all these options. This is what we recommend and why. And I think and I know, Seth, you had more stuff in there than that. We need to be very clear that this is not just a repeat of the same study. It's really directed at giving the legislature what they need to know to implement one without having to make a lot of stuff up.
I think that would be challenging for us right now because we didn't really get a lot of specific information to base any recommendations on about what specific.
No, that's, you're misunderstanding me. I'm not saying we should say what the specifics are, but that the study should be very specific. The study's scope should be very clearly directed at making a clear recommendation for how to implement a green fee, not just how might it work, what are all the different options, which is what CI essentially did.
Oh, okay. Okay. Yeah.
Scope of the study.
Thank you. I'm wondering whether the write-up that I shared with you a month ago or so, whether that was a clearer outline. I'd have to go back and take a look, but I'll make sure that Jonathan has that if that's helpful to him.
I have that, Beth. That's what, yeah. So most of the sort of bullet point things in that are in here. But I'll go back and make it stronger if that's what the commission wants, I guess a little bit more specific than it is.
Yeah, I think that's what Murray is asking for, greater specificity, and I think that will be helpful. I also noted that we all agree that a per arrival kind of arrangement like they are able to do in the Galapagos and Palau would be really great. But we also have heard that that's the least likely to be legal. So we probably should mention it and then leave it alone because it's not likely to be the direction that's going to be effective.
Yeah, that was my impression when I read the draft report. I really noted Seth's comments on the last paragraph that it'd be tough to propose that we go as similar as possible to Palau's arrival fee when that wouldn't be constitutional. So I think that whether or not we, become a little less certain with the type of fee and just suggest that maybe an implementation of a study and finding out the types of bases of which we could implement such a green fee is the most important consideration going forward.
Thanks, Winston. Any other comments on the green fee? Okay, let's move on to enforcement and compliance at DOTAX. Sale, that's yours. What did you think?
Yeah, I think in content and tone, it was pretty on the mark. The one question about the whether there's any evidence about tax collections not keeping up. I think the point in my original write-up was about the efforts that DOTAX made in trying to collect on rental income. So I think that goes to the comment about periods of growth are often periods of innovation. So where there is a different business model like Airbnb, and DOTAX may or may not be able to keep up with the type of innovation that is being put out into the economy. I mean, the other example there was on the rental cars, that they had put out a notice for that rental cars, car sharing, I guess, is subject to GET. And I'm not sure if they will be able to keep up with continuing innovation in the economy. But overall, I think it was pretty well written, and it gets to the point.
Comments, questions?
I just want to add that I attended a DOTAX workshop last week, which Jonathan spoke at, and they had dedicated quite a bit of time to enforcement, collections, and they have a new person that heads that up. And it seems like they've made a concerted effort to strengthen that area of DOTAX. And if they are successful, I think they'll be able to be much more effective in enforcement and collection of taxes. I just wanted to mention that.
Okay, I mean, I think that reinforces the point. I mean, they need to have, the enforcement has to come for both a fairness and an adequacy standpoint.
So I had one question, and that is in the recommendation box. Are we recommending additional funding that is needed now, or are we saying additional funding should be provided when it's needed?
If my recommendation would be to provide a steady stream of funding, because they were impacted by the across the board budget cuts. So I think that's captured in the current verbiage. I think it's that, you know, there wasn't any consideration of where they are in providing resource revenue for the entire state budget, so they were subject to the same cuts.
Dale, are you saying that you want to make sure they never do across the board cuts like that again, or are you saying to undo the previous one that they did and basically restore the previous funding that was cut?
Yeah, I think it's probably the latter, that they do need to increase their resources, and they also should be protected from future reductions. I think it's both.
How about if the go ahead, sorry, Murray.
I was just gonna say, I'm personally good with that. I just wanted to make sure we were clear on what we were saying.
Yep.
How about if we recommend that there be an assessment of the department's needs and an enhancement to their budget as needed?
Sure. Yeah, that's fine with me.
Okay, is there anything anybody else wants to add? Any objections to going forward with that recommendation?
No
Okay.
objections to the current recommendation. I think that if we could, I don't know if this is too late, but we touched on it earlier about not just enforcement, but compliance, and making sure that people who are trying to pay taxes, especially on cutting edge issues such as, you know, online marketplace issues, nexus issues, and short-term rentals, when we have novel issues, that the department might be better served to be proactive and to issue maybe an industry guide or something that would help these new or novel or niche industries, especially when you have ride sharing and other new industries, just to propose that the department issue industry guides, so that there is, you know, because I think we touched on it earlier, that compliance is the majority of all taxpayers. Most taxpayers want to do the right thing, and I don't think we want to leave them out in the cold. But just by increasing enforcement and saying that's the only,
Sure.
you know, just the stick has to work. I think the carrot might, might help as well.
Yeah, that makes sense. Like that goes to the resource question too, that they have kind of some industry or some set of resources that they can get ahead of some of the issues to allow people to comply.
Yeah, I really think that would be helpful. I haven't heard any downside or any, pushback in previous meetings I've had with people. So I think everybody wants to just know how to do it correctly. And if the department can help them, then that'd be appreciated.
Okay, I'm good with that.
Jonathan, did you take notes and you know how to change the section accordingly?
Yes, yeah. I unmuted myself because the last thing that Winston mentioned, I'll write something up like that, add a paragraph or something. But that's I didn't do that. I think partly because that's kind of my office, so that would be adding resources to my specific office.
That's okay. Nobody knows.
So, but I can do that. It's on record.
Yeah.
That the commission.
We hear your conflict of interest.
As long as you don't name yourself for a raise, it won't get too suspicious.
Don't worry.
And
I think
John,
that would be one of my questions is how much unfunded positions they really have.
Jonathan, a good data point for you is 96% of the department's revenue comes from voluntary compliance and 4% comes from enforcement measures. So, and that's pretty in line with most tax departments.
But a lot of times, if you don't do any compliance, you don't get anybody to,
Yeah,
if you don't have laws
feed
and
off
you don't
of-
have any teeth, nobody pays. So, that's the same thing with the county with real property tax or any other program. If there's no legislation and no teeth to it, then nobody goes going to comply. So. Yeah, I think I made a comment on email. It's just that discussion paragraph, the third sentence doesn't jive. I think something happened over there.
Yeah, sorry about that. I noted that. Thanks.
Okay, if there's no more discussion about that, let's move on to the Simpson Bowles like commission. Alton?
Okay. I think Jonathan did a really good job, but like Seth, I think we got to massage the title of it. I think scrutinize is a very strong term that the legislature will not look favorable upon. So I was going to say manage, but I saw Seth's comment, and I think he has a good suggestion. The other thing is I wanted to kind of run this by the rest of the commission or the other commissioners. On Monday, the president signed the infrastructure bill, and Hawaii will be getting $2.8 billion. And I'm wondering if we should maybe tie this commission into helping or suggesting that the state form this type of commission to manage, spending that fund, and I know that the infrastructure bill has specific uses of that money. And actually quite a few of them hit the areas that we've talked about for this Simpson Bowles Commission. But one, to help, I guess, government manage the spending of this and also incorporate other state-funded programs that can work hand in hand with the federal dollars. And hopefully we can come up with a more efficient, a better plan and spending. So I just want to put that out on the table and see, how you guys felt about that.
Good suggestion. Any comments on that? I would definitely endorse that myself, having seen how some departments and agencies have struggled to use various kinds of stimulus money and recovery money without getting a whole lot of community input. I think having some organization, some body that will be able to provide some real life input would be really helpful.
I think that's okay. Like for the county of Maui, we have a task force that we have in place that does recommendations to the mayor's office for consideration. So I'm not sure if the state has one already, but if that's what you're looking to, Elton, I think it does provide good insight. We do use industry experts in our task force to give the recommendations to the mayor's office for his consideration. So if that's what you're looking at, then it works for us. So.
Mhm. Well, I'm just thinking that, it's kind of like I want to say once in a lifetime opportunity, but it appears that way where we're getting, such a huge amount of money. And, in terms of the Simpson-Bowles Commission, which has been mentioned in a lot of other reports, but never got any traction, this kind of puts us in a different light in terms of, managing this chunk of change that we're getting.
Well, it does help them with recommendations of what we feel another party is feeling versus
Right.
what they're feeling. So just like for the mayor, if, homeless is what he wanted to do and they said the same thing, it just kind of helps him send that message that that's where we're going to put the money. I'm not saying homeless in particular, but just as a whatever we think that's most important in the state, it just helps the legislature or et cetera put the money towards what they're thinking of doing. So I'm in support.
I can see where this would not only provide some vital information, but also, I don't want to say political cover, but at least some rationale. If they are faced with any criticism, they can say that, they based the decisions on a commission that was established to help advise. I also wanted to comment that I kind of like the Simpson-Bowles Plus concept, because this is a departure and an improvement, I think, upon the original idea of the Simpson-Bowles Commission, which fits with what Alton is recommending here today too. Okay.
Just one thing, it's up to you, but do you guys want a new name other than, like, right now it's called the Simpson-Bowles Plus, right? But you might want to have something for Hawaii rather than name two retired senators that work for the federal government. I don't know.
That's right. And then we're active, what was it, 10 years ago?
Yeah, 10 or 15, right?
Yeah.
I was going to recommend the Miyashiro Gaising Commission.
Mhm.
I don't think that would get anywhere.
Oh, it should.
I think that's a good suggestion, and we should consider that. We'll leave it in Jonathan's good hands to come up with a new name.
Great. If anybody else has any suggestions to share, that would be great too.
Yeah, please do. I mean, my creativity went as far as putting a plus sign on the end. So if you have a recommendation, let me know.
I don't know if this is the name, but are what we're talking about essentially a tax adequacy audit of sorts, or is it something else?
I wouldn't call it an audit.
But it's some sort of study or review of long-term tax adequacy, right?
I would say it's
Yeah,
like the Committee for Long-Term Fiscal Sustainability.
that sounds good, Seth.
And now he wants to get paid, naming rights or something.
Okay, that sounds like a good contender. Okay, any other comment on this?
No.
Okay, let's move on to the property and wealth taxes. It was interesting to me to see that the recommendation was to form a task force. And at first I was thinking, we didn't really say that. I went back to the original Tax Review Commission that talked about property taxes, and they laid out the issue of property taxes mostly in the context of what the tax system across the state looked like in all of its glory. And that really is not our approach to this. However, I was also thinking about what Senator Delacruz was sharing with me and his enthusiasm for figuring out ways to work on housing, and also strategies to work to coordinate and address financing with the counties. And so I'm thinking, basically, I rewrote the recommendation, which I think could certainly be improved upon. But I said, encourage the legislature to identify and pass legislation that creates structures and mechanisms to coordinate the state and county action that addresses shared responsibilities for land use and housing, potentially among others. The legislature can match, coordinate, or otherwise incentivize county initiatives that reform and increase real property tax revenue and take other actions toward this purpose. Is that something that you would support? Basically encouraging the legislature to figure out how to work more closely with the counties. And Scott, I'd particularly be interested in knowing how you feel about that, since you probably know the dynamics between the state and the counties better than anybody.
Yeah, the hard part is every county has a different financial position. For the county of Maui, we do support a lot of state functions. We do give a lot to nonprofits, unlike other counties. Like I mentioned before, we actually have an ordinance that takes 3% of our real property revenue for affordable housing. I don't think other counties do that as well. So I'm okay with what you're recommending. It's not solely my vote, but you know, it's every county is trying to do what I think we're trying to do. We know the state wants to pawn more things off. We got emergency services on us. They don't pay for that. We've been paying for all of their overtime for the state emergency EMSs. They've been trying to push off more things on the lifeguard situation. So, you know, slowly we know we're getting more unfunded mandates as it goes, but we know that. I know each county's position as to real property tax and giving it to the state. And, you know, they're talking about, if you want to do that, you need to do a constitution convention, and, you know, et cetera, et cetera. But I'm okay with the general gist of what you had done. I'd like to hear from the other commissioners and their thoughts as well.
Just my 2 cents on the section. I agree with Beth that because this is mostly a county concern instead of a state concern, I don't know how helpful our suggestions are going to be on the specifics of classifications and rates, seeing as those are all set by the counties. I do think that exploring options on giving the counties more flexibility in how to raise revenue and how to use that revenue could be more useful. I know a while back there were recommendations for tax increment financing, or TIFs, and there were I think CFDs or something like that, like county financial districts, or, you know, certain districts where you could tie revenue from property tax to pay for specific operating expenses or services or whatever it may have been. But I think that the state would be well served to explore those options, because it would give the counties the flexibility to raise revenues based on their existing streams of revenue, while also giving, you know, more flexibility than what they have to pay for, you know, these mandated expenses that are coming down the pike on them.
Yeah, and I think for what you're talking about, Winston, I think a lot of counties would probably go more for the CFDs, the community facility district, and the tax incremental financing. You know, tax incremental financing, it's very popular in the mainland, but that's assuming that nothing ever goes down too, right? So you can pay off the bond. So I think CFDs are something more traditionally more acceptable to put it on the, I guess, whatever you're trying to develop, and putting it out to have them basically almost like pay like a revenue bond for that finance. So I think that's definitely something that every county is looking at, because when you do a tax incremental financing, you kind of create a separate district. You don't get any more from them because all the difference goes to them, you know? So it's a little different. CFD and TIFs are very different in that sense. So yeah, I mean, it's good comments. I appreciate that.
Just wanted to ask you, the way this is worded right now, it says to form a task force, and I think my recommended language was more vague in having the legislature identify and pass legislation to figure out how they can work better with the counties. Any thoughts on which approach would be better? Again, Scott, do you think that?
I really don't think a task force is going to do it. You can tell the county all they want, but they're not going to do it anyway.
Well, you can do that with this too.
Yeah. So, yeah, I mean, the task force, I don't think, I mean, yeah, I've already heard a lot of this from each county's perspective as well. And yeah, I don't think a task force is going to do it.
Okay, I appreciate that perspective. You certainly know more about what's going on in all of the counties than any of the rest of us.
Well, just out of curiosity, Beth, what did your dream outcome be out of all of this? Like, say everybody works together really well. Like, what information would you like them to, or what's the outcome?
If I had a comment to that, Seth,
yeah,
wondering what the commissioners think about now that the legislature gave the counties a 3% TAT. I'm wondering if you guys have any thoughts on that. I have my own comments because we didn't get TAT, right? So because the state kept it. Now they're giving us your own levy 3% for your own county. Does the commissioners want to have a stance as to what that goes? So I don't know. You know, I don't want to make a statement because I'm so tied into that with the county, but I wasn't sure if the commissioners had any comment about the new 3% TAT given to the counties.
Oh, that's a good question. I haven't given it any thought.
And just for context, for your information, I know Director Choi is not on here, but you know, for Maui County, just for example, in previous years, if we were still getting it, Maui County would get about $23 million a year from our TAT. By us collecting 3% of TAT, we are stand to make between 50 and 75 million per year. So you can see how underfunded Maui got in comparison to what we gave the state. For Kauai County and the Big Island, I believe they will get less money from this arrangement. In fact, if for the last 3 months, if we were to get 3%, Maui County would make more in TAT than the city and county of Honolulu.
Oh.
We have more tourists paying TAT on Maui County than in Honolulu.
So right now, what's Maui planning to do with the money?
I wish my mayor didn't say anything, but he did earmark certain things like affordable housing. He did earmark money for paying off long-term debt, as Elton would like to see as well, probably, whether that's a UTF or any type of OPEB. He also did put money into the tourism management sector so that the hotels, because they're paying into it, would be getting something in return to their visitor. So I'm not sure whether that's messaging for the tourists or whatever it is, but it's more about tourism management. And I can't remember the last sector, but there was 4 categories that he mentioned that we would be putting our money towards. But you know, it is a big chunk of change that the counties will get. And we started ours effective November 1st. So our first collection will be in December 20th. So potentially $3 to $5 to $6 million a month. I see everybody spinning their wheels and numbers in their head. But, you know,
Well, you know, Seth was also asking what ideally would we want the state to do vis-a-vis property taxes and working with the county. I am always unrealistically optimistic in thinking that the world would be better if people coordinated and worked together on achieving big policy goals, and housing and infrastructure and addressing climate change and all of those things really are, they go across the state and counties. I think in many respects, the counties are better because they're closer to the communities in addressing those things. But the state also has a lot of power and resources to try to make sure that things happen consistently across the state. So a combination of community decision-making that meets unique needs with maybe the greater emphasis on fairness and equity that you might get from the state. Murray?
Yeah, I haven't said much because I think I said this in the past, Beth. I understand the attractiveness of taxing wealth and through property taxes. I understand that our property taxes are relatively low compared to other states, although our overall tax burden is high compared to other states. So you can't look at property taxes in isolation. My general feeling, though, is given the state county divide over property taxes, right now it's the counties and they don't want the state to touch it. I don't know if it requires, you know, a constitutional convention or something dramatic to change that. I think I'm even more sure than I am of other subjects. I'm fairly sure anything we say about property tax will most likely be dead on arrival. And I'm not trying to rain on the parade. I just don't think it's going to go anywhere. So I haven't really commented on it because I'm not sure that it really matters what we say on the topic. But again, happy to say something. I just don't think it's going to be listened to.
Okay, well, I appreciate that, Murray. I do know that we have a limited scope here in terms of what we are able to do, and property taxes don't necessarily fit so neatly into them. Shall we move on? Winston, talking about retirement income equity.
Sure. I think that the original draft is on point with what we, discussed, and that just hold on one sec. I think it's consistent with the prior commission's thoughts, but I don't think that we got a full discussion from the entire commission on whether or not we wanted to give it a full-on recommendation to continue exempting retirement income, or to just have a study, or just to have some type of analysis going forward. My initial recommendation was to have just the numbers be placed in the report, which would be there, but I don't know if the commission had any thoughts on a stronger recommendation.
Thoughts on that?
Yeah, my only comment, I didn't read it too fully, but when you say the recommendation is to tax pension and retirement income uniformly, is that what you're speaking to, Winston? Uniformity, does that really address what you're trying to change, or?
Yeah, that wasn't my original recommendation. I think that, just the evaluation of the exemption and the cost to the state would be the recommendation, instead of the prior commission's recommendation that they would tax them uniformly.
Just so you know, we have provided you with the cost to the state of the,
Right.
So you guys have that information.
So I think that including that in the report and just giving it to the legislators and saying that it's their job to determine if that cost is, worth keeping to the state. I don't know. I don't feel one way or another on whether or not to give a recommendation on to sustain that exemption.
Just my 2 cents worth. I actually didn't realize before being part of the TRC. I think I expressed this early in our time together. I honestly, maybe I just ignorant, I guess, but I didn't know that 401ks got taxed, but pensions didn't. And it just seems so astonishingly inequitable that I just don't know how they can justify it. So if we were taking a vote, I would vote to have pensions taxed the same way. And if they want to change the way they tax 401ks, fine, but have pensions taxed the same way, defined benefit, defined contribution tax the same exact way. I'm okay with leaving Social Security out because in theory, anyone, pension, defined benefit, defined contribution, anyone can in theory have Social Security. So I'm okay with leaving that out, but I don't see I can't think of any justifiable reason that two people with the same income, one has a pension, one has a 401k, one gets taxed, the other does. I don't get it. I can't think of any equitable reason for that. So I'm actually more supportive of having a specific recommendation to tax defined benefit and defined contribution the same way. And if they want to change the way, that's fine, but I think they should be taxed at the same level. I'm happy to be outvoted. I'm just giving my one little, my little opinion here.
Other thoughts? I would say I look at this not just from the equity point of view, but also the adequacy point of view, and looking at the aging population in a place where I know that lots of retirees have limited incomes, but a lot of them have a lot of resources. And I would actually be inclined to look at taxing Social Security income above a certain level, as well as pensions. So I sort of would be more likely to want to go a little farther than you, Murray, and look at how are we going to pay for all of the growing expenses, given the fact that more and more people are leaving the workforce.
In my humble opinion, I would want to not tax Social Security. We tax both defined benefit and defined contribution plans equally, but we have a base, and anything over that base would be subject to this tax.
I'm sorry, could you repeat that, Alton? What's your recommendation?
Well, my recommendation would be that the defined benefit and defined contribution plans are equally taxed, but only over a certain base amount.
Okay.
And Social Security would not be subject to tax.
That's more or less where I am too.
Yeah, that's what's in the report right now. That's along the lines of the current recommendation. So
Yeah, I agree with that.
The only problem I had with the current report is, didn't the current report have like a 25-year exclusion or something? That's just really long.
I think that was the exemption of $25,000. That base amount would be in place for 25 years was the recommendation.
Well, it wasn't no taxation for 25 years. It was just that base amount that doesn't.
Right.
Okay.
That's what I saw.
That's less. I mean, it's like pass a law, but it doesn't take effect for 25 years. Like, who the hell cares? Okay, I get it.
So it sounds like people are leaning toward that recommendation, that that both kinds of pension are treated equally above a base amount. We'll leave Social Security alone for right now. Is everybody good with that approach?
So just so I understand, this would probably result in a loss, right? Because all of a sudden you're exempting the 401k distributions, which are currently taxed. If I understand you correctly, like you want the $25,000 exemption to apply to both types of income, retirement income? Because the proposal was just to put a limit on the amount of pension income. which that was untaxed, which is 25K.
Right. Would it be possible to see if we could lower that amount by just to see what that impact would be if it was lowered to maybe 15,000 instead of 25,000?
Or put differently, Seth, I'd be really interested to know what the exclusion rate would be that if it applied to both defined benefit and defined contribution would keep you at least at break even and not a loss of tax dollars. Because I think
Yeah.
originally when we talked about taxing pensions, the idea was that it's going to bring tax dollars in, not result in a loss. So if the math isn't too hard, I'd be curious to know what exemption level for both, if applied to both defined benefit and defined contribution, would result in sort of break even, so that you know that anything lower than that exemption would be a plus and anything higher on the exemption would be a minus on tax revenues.
I would not feel comfortable. I mean, I wouldn't have a lot of confidence in the estimate that we provided you. And the reason is this, we get information on exempted pensions because they have to tell us how much money they're exempting. I have no idea how much 401k distributions are out there. And
No
so
visibility on that?
what's that?
No visibility on 401k
No.
numbers?
Not on our tax forms. And then, so I would be taking huge guesses. So if you guys are really trying to like find the thing, I don't think I would give you I would tell you, I'd give you an estimate, which I wouldn't put a lot of money on, you know, because I just have no idea. We have no way of seeing other than maybe taking some guesses. I mean, maybe we could take some I could do some research from like on the national level of how much people get from 401ks and things, and then apply that. But it would be a really sketchy revenue estimate, right? And so I don't have a lot of faith in coming up with that type of a number.
The way I drafted the recommendation, and again, it's not a suggestion, it's just the way I landed on it for demonstration purposes. But the 25,000 is for the defined benefit pensions. And the reason for that is because in Hawaii, defined benefit pensions aren't taxed. So the other side of that coin is that you don't get a deduction for the contribution. So a contributory defined benefit system, for example, the state system. Now, an old school system with no contributions, it doesn't matter because there's no contributions to get a deduction for. So the contributory system, you don't get a deduction up front, but you're not taxed on the end. So that's why that's limited to just the defined benefit pension. The downside of that is, and the reason I use that is not because I'm trying to suggest anything specific, but because Baybars used that when he provided the numbers. So it allowed me to kind of provide something firm and some numbers and things that were discussed at that meeting. So the other way to do that, I think it might be an easier way to get to something y'all are more comfortable with equity-wise, is to do something a little bit less firm than the 25,000, but something that the previous commission recommended, which is just allow deductions for some sort of deduction mechanism for the people that are getting the defined benefit pensions. And then you can limit that to a number of years as well. That gets you to a level where you're essentially the same as defined contribution. You're getting a deduction up front and you're getting taxed on the end. It's not perfect because the timing of the deduction, time value of money and all that stuff, it's going to be hard to estimate and get that right, but neither is the 25,000. So that might be an easier way to get there without going as far as to allow the exemption for defined contribution as well.
So essentially put a deduction in place, but with a sunset provision, so long as it takes to kind of settle into equal taxation over the years.
And it would be, and I mean, that's kind of what I'm recommending is a watered down version of what I did. I mean, what I did is 5 years out and then 25-year continuing exemption. That gets you to 30 years. Because what I want to avoid is what I noticed, and partly this is because I work for the state, is, you know, the person like me who's been here for 8 years, I'm going to work another 22 years here possibly. Well, I'm going to get that deduction. Like Baybars' numbers were based on taxing pensions on the end, but allowing state workers, for example, that have a contributory pension, a deduction up front, and that deduction would start, and that was worked into his numbers. But the person that's been paying in since 1997, they're going to retire in 5 years. They're only going to get 5 years worth of deduction. So they were taxed up front. After tax dollars were contributed to the pension plan, and then they're taxed on the end as well. You'd be trading one inequity for another.
Right.
So the way I did it was based on, like I said, Baybar's numbers being 25,000. So it was very firm, and there were some numbers there, but it's not perfect. Now, what the last commission recommended was the language was very vague. It just kind of said a deduction for amounts contributed in, or something like that. So there would be, for the actual bill to do it would have to define that. But
yeah, but you raise an important point. We missed that. At least I missed that fact that they did not get the write-off. It was after tax dollars that went into that pension effectively. Yeah. So,
right. But
so given the exclusion only for the defined benefit plan is actually not an inequity. It might be a misestimation, but it's not an inequity per se, since they didn't get the tax write-off that the 401k contributor did, right?
I think it's still an inequity, and here's why. The defined contribution, a Roth versus an IRA, is mathematically the same. Your only risk is that the tax rates change. The defined benefit, I don't think, is the same. Like this, you don't get the tax deduction up front, but you don't get taxed on the end. But there's a lot of value built into there. It's not just your contributions times the growth rate. The fact that it's guaranteed, the fact that it can't run out, the fact that it has no risk for the market and stuff like that. Like, I think the way it is now, I think y'all are right to identify it as an inequity, because even if you get the deduction, even if you don't get the deduction up front, it's still an inequity to not have the tax at the end at all, even if you don't get the deduction up front. So I think it's an inequity that y'all have properly identified. I think it's just fixing it is a little bit more complicated than just taxing on the end. So that deduction mechanism is for, or continuing exemption that I called it in the report, is kind of for that. It's just messy.
Right.
And so I guess
yeah, when you explain it, it makes more sense the way you set it up, especially when you talk about a soon-to-be retiree probably getting out around age 60 or something,
right.
And you got like 30 years, which I'm not no actuarial expert, but that's about a good lifetime for a defined benefit pension plan to keep running. So that makes sense when you explain it that way.
Yeah, and the other thing that makes it more complicated, and the reason I think possibly going back to something like what the previous commission recommended, is that you also have people like my mother-in-law. She started working for the state in the 70s, so she went her whole 30-something year career. She never contributed anything. So for those people, there was no deduction. Not having the deduction up front means nothing because there was nothing to deduct. But I don't know when it switched to a contributory system either. I didn't look up that number. So putting something instead of a hard, firm $25,000 a year continuing exemption for everybody that's getting a defined benefit pension, having that deduction mechanism might be it's less solid and will give you a less solid number, but it might be the only way to do that.
And if we have that amount, would we want to tie that to the CPI as well?
I'll have to talk to Seth about that. I don't know, because I'm trying to think. I mean, you're giving them the deduction. Because you can take the actual amount that they would have gotten to deduct, say in 1997 or 1998, 99, 2000, and you can allow them to deduct that, but then they're losing the time value of money, obviously. So that deduction times some amount to that year, I think that would have a CPI built into it, because it would be like the time value of money to that date.
Right. That
would be the department or somebody, developing that number every year and kind of putting it out there. It would also require them to get the data on there. Well, actually, that would be easy, because or at least for state pensions, because it's a fixed percentage based on when you started working for the state and stuff. So that's not hard. But I think that would be the way. The nuts and bolts of it would be you would get the deduction first year deducted on the end. I get first year contributed, first year deducted, and then it would be adjusted for time value of money based on how many years have gone by since the deduction.
Okay.
That sounds theoretically correct, but so difficult to implement that I don't think they would ever actually do it. I think I'm probably back to where the deduction is just a set amount and you just sort of do the best you can, then you get better number estimates out of it. But given the deduction they never got for the contributory system, that then allows you to justify just having that deduction be for the defined benefit, which then does not cause the problem that Seth indicated, which is you might actually lose money by doing that because you don't apply it to the 401k folks. So it still then becomes a money maker, but you've got things in to mitigate the harm to those that have had pensions for a while. So I'm probably back now to having the deduction allowed for a number of years, but ultimately taxing the pensions and the 401ks the same way. So all the other math, I mean, in theory, you need a certain deduction for each person based on when they started working and how their salary changed from year to year and how much they contributed from year. And you need like a custom number for each pensioner, which is just never going to happen. So sometimes it's like close enough.
Okay, so is that an approach that everybody would like to have Jonathan and Seth work on? And we can review
Yeah.
it again next week?
Yeah, I think the deduction idea is a pretty, I think it's simpler and it's got a chance of at least, starting a discussion. And I think that making it clear that deduction would only be available to defined benefit pension income would be important to note too.
Do y'all want me or I guess Seth to kind of redo what Baybar's did, except with 25 with some other amount? He did it with 25 and he did it with 50. I think Winston mentioned earlier that, different amounts and stuff. So I don't want to leave it behind without asking that question, because I have that number for 25 and that's kind of why I use 25. Do y'all want to see that number for 25?
Yeah, is it possible for you to write it up for 25, but just include an estimate for 50?
Yes, I think Baybar's already did it for 50, so no problem.
Okay, great.
Okay, have we resolved that issue then? Then Kate had increasing the standard deduction and personal exemption, so she will talk about that when we meet on December 1st.
Just so, because we're supposed to add everything together.
Oh yeah, what do you need to know?
Yeah, what do I need to know about that? That's important.
Sorry, my dog was needing to be let out. I missed the question.
So since Kate isn't here, she's not able to comment on the section on standard deduction, personal exemption. And yet Seth needs to have a recommendation for to work up estimates.
Yeah, I thought on one, and someone that remembers can spark my memory. We provided the numbers for double, triple, and I think even 5 times. I thought we landed on double, but I don't recall if that was for both the standard deduction and the personal exemption or just one or the other. Do you guys remember? But I thought we landed on double because, yeah, given more would be great, but it also has a bigger revenue impact. So I think we tried to balance those around double, but the rest of y'all remember if it was both the exemption and the deduction or just one or the other?
Jonathan, when you reviewed our notes, did you see what we recommended?
Right, I did hear, I do remember hearing double being kind of the consensus. The triple was for the standard, the double was for standard deduction, triple was for standard deduction. The quintuple was for quintupling the standard deduction, but also getting rid of the personal exemption altogether, the way that the federal government did in 2017 for 2018. So the reason that the report so that's why the write-up has double, but the reason the write-up has a personal exemption as well, which I didn't hear a lot of discussion on, was because I did hear discussion on, specifically from Kate, about how it would be more helpful if it shows up in a month in your monthly paycheck for these people. And the withholding rates are important for that. And the withholding rates are determined by the personal exemption. So that's why I just added that on. There's no number for the personal exemption, I think. Yeah, there's no number for the personal exemption. So, that was something I added just because of that. It's not a suggestion. It just was added because that's something that Kate thought was, or mentioned was important, and it was her issue. So I guess first of all, for Seth's question, there's no number for that yet for the personal exemption. He did send me something the other day, so it might be in there. And then, so for adding it all together, there's just some little details like that to get that. But that's if y'all decide to double the personal exemption as well.
So just so you know, if you double the personal exemption, everybody gets it. If you double the standard deduction, it's mainly lower income people who get it. Because it's mainly lower income people who do not itemize their taxes.
Yeah, which is important from a equity or progressivity point of view. But I think a lot of the reason we explored this from the beginning is these haven't been updated in a very long time. At the very least, they need to be updated for inflation since they were last changed. So yeah, we can talk about equity issues too, but both of those numbers are way out of date in terms of what inflation has done in the ensuing years.
I do recall that we looked at what the personal exemption would be if it were brought up to date for inflation, but I don't remember what that was or what multiple that was. Maybe what our approach should be, double the standard deduction, bring the personal exemption up to date at the same level as it would be if it had been increased for inflation.
Adjusted every year. Yeah.
Yeah. Does that sound good?
Seems reasonable to me.
Okay.
And then
I would
have
be supportive of that.
and then have the inflation be inflation adjusted every year after that, or not? Yes.
Yeah.
Okay.
So you don't have to do this again.
Mhm.
Index both to inflation.
Okay, so the standard deduction would be a straight doubling. Personal
Yes.
exemption would be just bring it up to where it would be if it had been adjusted for inflation since the last time it was changed.
Yes.
Okay, okay.
Okay.
And
Is that
we're still with increasing the tax brackets by inflation too. Yeah, we still have that in there, or no?
I can't remember.
Thought we had the tax brackets going up with inflation as well.
That was discussed. I don't remember if that's in the write-up or not.
That's not in the report that I read.
Okay. Okay.
But if we're recommending that we index the deduction and exemption to inflation, then I think the tax brackets need to be indexed to inflation too.
We can do that.
Oh, no, sorry. It is in the text box for recommendation. I'm sorry.
Okay.
The tax bracket. So it is in the draft. That doesn't mean anything. That's not a suggestion from me. So, but yeah, if it wasn't there, I wanted to clear that up.
But that seems to be, it seems to make sense and consistent.
Yeah, otherwise you push taxes downward year after year as inflation goes up.
The opposite of what we've got now. Okay, does that provide enough information to you, Seth and Jonathan?
Mhm.
Okay, then moving on, the next one is yours again, Winston. In fact, I think there's section 8 and 9, which are both about tax exemptions and tax credits. So I don't know whether they should be two separate sections and two separate recommendations or whether they should be combined, but you tell us.
Right. I think it's a good starting point. I think we want to make that clear that in terms of scrutinizing the exemptions and tax income credits, we just need to acknowledge that a lot of them are, a lot of them might be needing more thorough analysis, but due to our limited time, we're just starting off with those listed in the state auditor reports. But the specific ones that I thought were named in this draft, for instance, the exemption for the $2,000 exemption for blind, deaf, and disabled income, the independent cane farmer exemption, and the securities or exchanges exemption were all worthy of just being, repealed. I don't think anybody was seeing any use out of those in the past few years, and we don't really have those industries anymore in terms of the sugar cane and the securities exchange industries in Hawaii. So I think that, making it clear this is a starting point, the legislature has to continuously evaluate the auditor's reports. But in terms of us providing a starting block, just repealing those from the get-go would be my recommendation.
I don't think that you get any argument from anybody in this group. What about increasing the transparency of income tax credits?
Sure. I actually like the way that Jonathan has this written, because it does raise our concerns about taxpayers' confidentiality, but at the same time, feeling that qualifying for a credit isn't something that people are just entitled to, and that these credits are in place for a reason to advance certain policy goals. So to the extent that we need to make sure that credits are justified and that they're advancing these policy goals, then this confidentiality isn't as great of a concern, especially because taxpayers aren't entitled to them. So I think that providing for that disclosure and in any way that the legislator wants to do, I think that's a good recommendation. I'm in favor of it.
I think one of Seth's comments was, does this apply to all tax credits? And I don't think that there was ever that intention, but maybe, we didn't really discuss that thoroughly. We weren't talking about earned income tax credits and general excise food tax credits that go to 300,000 people. We're talking about maybe the film tax credit or the agricultural tax credit or whatever.
Right. So I saw that comment, and I agree. It should be just for those business incentive type of credits. And I think recommending that any, subsequent legislation that advances a credit or any new proposed credits should include some sort of confidentiality waiver or some sort of disclosure requirement for those who are claiming it. It might not have to be retrospective for credits that are currently in existence, but for any new credits, they should keep that in mind and mandate some type of disclosure.
Any comments? Okay, I think we're on board with that. This is not exactly what we were talking about with tax credits, but I did want to bring this up to the group and see whether you would support this idea. I noticed in Jonathan's report, he had talked about the earned income tax credit, and the EITC is a tax credit that goes to low income households. And the tax credit is used to offset tax liability. It is supposed to expire if not renewed at the legislature this coming year. I would like to endorse passing it and making it a refundable tax credit. Again, I know we haven't discussed it. It doesn't really fit into this part, but if you would entertain that idea, I would like to include it in our recommendations.
For me, being a numbers guy, given the information that I believe it was Seth, you showed us once upon a time, income versus consumption, and that the bottom, you know, the poorest people actually consume quite a bit more than their income because of tax credits and other things. I'd be curious to see, I think you had like some bar charts and some numbers and stuff like that, how much that would change if this was done, because I just have no way to conceptualize, if you make it refundable, how much does that boost up, you know, that income group by having it be refundable? So people that had no tax liability, they just get a check. I mean, how much does that increase that difference between income and consumption?
About $40 million.
Yeah, but I'm thinking on a personal, like,
Yeah.
someone they made $15,000 a year. I don't know, I'm making it up, and now they get 30 or, you know, thousand a year. What's the difference between what we have now and what they would get if this was refundable?
Yeah, okay, so anything with the EITC tends to get really complicated because the calculations tend to be really tough, but I could come up with, like, I can show you the difference in, like, for a family of 4 making different amounts. I can definitely.
Yeah, a couple of a couple many cases to look at. I'd just be interested because I mean, I know that in theory it always feels good to, you know, tax the rich and give it to the poor, but there's a limit to how much you can do that, right? Eventually, you know, that can backfire on you in economic growth because the rich people go elsewhere where they won't be taxed as much. But so I'm open to the idea, Beth. I just would love to see some sort of at least basic analysis of how much difference of income we're talking about.
If you can produce that, Seth, that would be good. I know you'll be asked to produce it pretty soon anyway. Okay, good discussion today. Thank you, everybody. We have a few outstanding issues to make decisions on when we get together on December 1st. I don't know to what extent any or all of you want to contribute as editors to the draft as it moves along, or whether that just would be too confusing. I personally do like to edit, and I do intend to contribute my editorial contributions. So I don't know whether the rest of you do as it moves toward a final draft.
Yeah, I mean, I personally would. Like I said, I already made a set of comments that I passed on to Jonathan, making it clear that I was speaking for one person only, but just some of it was non-substantive. It was like wording and commentary and stuff like that. But I think probably each of us, at least on our own sections that we're focused on, and then everyone has the option to comment on other sections as well, right? For me, just speaking for myself, I've taken one bite of the apple already on the draft, maybe one more or 2 more at the most. When there's lots of versions, I don't want to like edit it 10 times, right? That makes me crazy. So I'd probably look at it once, or, you know, make red lines once or twice more, but not, you know, 5 times more if there's lots of different versions floating around.
Okay, that makes sense. So we will be sure to circulate versions as they're completed, and then everybody will have an opportunity to comment and suggest edits if you want to. And if everything looks good to you, then there's no need to do that.
And one last request on that, Jonathan. I know this might make your job just a touch harder, but if there's a way to give just a handful of bullet points in an email, like in this draft, the major things that changed was this section and this, so you can kind of zero in and not have to read everything over again every time.
Yeah.
Kind of
No
key us into where the big changes are.
Yeah, no problem.
I assume that the next version, probably we should read the whole thing again.
I'm sorry?
I'm assuming that the next version, we should probably read the whole thing again, because there are a lot of comments that Seth and others contributed. I think you'll be making a lot of changes to the first draft.
Yes.
Okay.
It's not like you're going to be using track changes or anything for us to follow along. It's just see the changes, or
Oh, that's up to y'all. I can work off a master and then take every, the commissioner's drafts, and then, I can do all of my stuff in track changes if you want to do that. But for the next draft, the next draft on the scope of work I was given is December 13th, and that's labeled as a final draft for review. So that's not, I don't intend to wait that long. So there probably will be intermediate drafts. I think, as Beth said, the next one will be a big change. So maybe after the next one, I'll start doing maybe track changes or bullet points, or whatever y'all prefer.
So since our next meeting is December 1st, where we will have some more substantive decisions to add to it, how soon thereafter can you give us an updated draft, Jonathan, by like Monday the 6th?
Sorry, I was muted. For another draft, I can do one sooner than that. I think that would be more helpful.
Okay.
So that by the December 1st meeting, you've seen something more.
Okay.
But the next meeting is on the 1st. That's 2 weeks. So I'll try to send one by the end of the day next week, next Wednesday.
Okay. We
So-
can read it over our Thanksgiving turkeys.
Sure.
Okay. Great. I think we have pretty much concluded our agenda today. I know Alton had to go. If there is no other business, then we will adjourn and see you on December 1st. Everybody have a nice Thanksgiving.
Thank you.
Everyone.
Bye.
Bye-bye.